I'm really glad I've got slides because so much of what has already been said this morning is in my slides, and so I can prove that I didn't just crib it off them. I actually thought these thoughts beforehand. Toynbee Hall, established in 1884 in Tower Hamlets, trying to tackle poverty and inequality, the first purpose-built settlement house in the world. People like Clement Attlee and William Beveridge came and volunteered at Toynbee Hall and worked with the community and got their ideas around the welfare state and took those into government. And our ethos is very much around working with local people on local problems, trying to find solutions that work and then scaling them up. I'm sorry because I'm standing in front of slides for half the audience. So, credit unions. I think the most important point I want to bring out about credit unions starting in this country is that one of the two credit unions that's considered to be the founding credit unions was founded by a group of people from the Caribbean states who were living in this country and couldn't get access to banks. They couldn't get access to bank accounts, they were turned away. And so they started with other friends a credit union because they couldn't get paid, they had nowhere to keep their money, and they needed financial services. So credit unions began in this country not as a cosy savings club, but as a real response to a financial need, to financial exclusion, and primarily financial exclusion around migrant workers. And for me, that is really important to come back to as the founding principle. Now, obviously, there's been huge growth, but where are we in 2015? If you look at the stats, we absolutely know that there is financial exclusion and financial detriment and poor financial health in so many ways in this country. Tough. It doesn't matter where you are in terms of social mobility or financial education. You know, there's still people out there who, including our own families, our own communities, wherever we come from in society, who are struggling. And those figures tell us that we haven't cracked access to finance, or the fact that the financial products and services that we do have are still not meeting people's needs. It's just the case. So Dame talked about a point that's really close to my heart, which is around where we see the problems coming from and the bigger picture. You know, I work in financial inclusion, and I can't tell you the number of times. In fact, if I had £1 for every time someone said this to me, I could have bought my brother a house. Literally, every time I talk about financial exclusion, people say, oh, if only we could teach people, if only we could educate these stupid people about how to get a bank account, how to not borrow from a payday lender. And of course, financial education has a role. We all know that. But that isn't the major cause of the problem. A piece of work that we did in Toynbee Hall, in Tower Hamlets, so we took that poverty premium research that Save the Children funded, which was that desktop exercise where they calculated if you did have access to financial services, what life costs you, and then if you don't have access to financial services, and that difference came out at around £1,300. And I thought, I wonder what it is in Tower Hamlets. So we went out and we interviewed people across Tower Hamlets, and we did the maths, and it came out to slightly less. And the reason it came out to slightly less was two key factors. Financial education, they knew their stuff, and they had really strong social networks. But that only knocked about £150 off the total cost to them of being financially excluded, of having to pay more for financial products such as insurance or credit, or not being able to access a bank account because they're a recent migrant. So financial education is important, social networks are important, but in my count, they're about £150 worth of importance. It's really, really about the provision. And I think Dan made a really good point, which is that credit unions for far too long, like every single sector, have seen themselves in isolation. And also we as society see things in isolation. So we complain about the banks, but do we complain about the social landlord who gives a new tenant 5 working days notice from move out of your current bed and breakfast property with absolutely nothing that you have of your own into an empty social housing flat where there's nothing, and in 5 working days notice, kit that property out with a fridge and a cooker and furniture, and move your kids from one side of town to the other side of town, and of course you're busy. And I say to them, what help do you give people to kit that property out so it's livable? Or we give them a leaflet. Oh, what leaflet do you give them? Oh, we give them loads of leaflets. We give them a credit union leaflet. Have they ever heard of the credit union? Did you introduce them? Did you take them down? Did you even find out if they could become a credit union member? No, we haven't got time to do that. Well, no, you've just given them 5 working days' notice to move their entire life. So it's not just the banks that we have to point the finger at, and of course it's not just the community finance sector we have to point the finger at. It's all the bits of our society and every single service provider in any form, whether it's the school that tells all parents from now on, maths homework, submit it online please. Immediately there's a cost to the customer there. Or, oh, the doctor says, sorry Mrs Williams, you've got type 2 diabetes, from now on you must eat fresh fruit and veg. Cost to the customer. Does anyone do the work around how are you going to get to market with these really gammy legs that you've got from type 2 diabetes? One customer I supported around that issue, spending £10 a week on taxis because she was trying to do what the doctor told her, but there was no access to fresh fruit and veg in her community, so she was getting a taxi because she couldn't make the journey. £40 added to the cost of her fresh fruit and veg. She's living on a pension. Where on earth is she going to get that money from? So to solve these problems, we have to move back from looking at individual sectors, thinking that a sector can solve the problem, and work together. Big ask, I know, but it's the only way that you get anywhere. Okay, so credit unions. Big challenge around regulation, David already talked about it. And I think one of the key things that we're seeing here is that the new regulator, so the 2 new regulators working together around credit unions, have created some very important changes in regulation, but there's also additional burden for credit unions. One of those is around being professional. There's a whole culture now around the individual member being, as in the board member or the staff member, being responsible for when it goes wrong. Well, those people are scared. We have to put in training and support. I'm getting a 2-minute warning. I'm talking as fast as I can. So we need to tackle that. One of the big programmes that Mick here and I are working on in the Financial Inclusion Centre, along with a couple of the trade bodies, is providing new training programmes, testing them out in pilots around the country with credit unions, and hopefully we'll be able to come up with stuff that really works and deliver that. Also around financial education. Number 2, this constant challenge between poor man's bank versus sustainability. How on earth can credit unions, on their own, meet the range of all people in communities? It's impossible. This is, I think, if we can't crack what credit unions are supposed to be for whom in which ways, we'll never get out of this circle of who's supposed to do what with whom. And for me, this leads to this point. Who is leading the development of the sector and who is leading the debate? I spoke recently at a trade body credit union conference, and someone came up to me and said how angry they were, sorry David for later, how angry they are at the fact that the Archbishop of Canterbury stood up and essentially told, in his mind, credit unions to go out, churches to go out and start credit unions. And the credit unions were saying, why didn't they just come and talk to us? We're all over the country. And saying that there'd been too little engagement. Now, of course, it won't feel like that from the church's side, but it certainly has felt like that from the credit union side. The whole Move Your Money campaign against banks. Yes, they latched onto the credit union sector, but how did they actually support the credit union sector? So how can community finance take back the argument and take back the initiative and be leaders? And finally, this comes down to me for know your customer. Know your customer. Who are they? Decide who they're going to be. You can't probably simultaneously be an old community-style credit union where you're a savings club and tackle welfare reform on a large scale. These are impossible things to bring together. But in partnerships, you can start to offer those kinds of services. One example of a partnership that I think is fantastic is Affinity Sutton, housing provider, working with Leeds City Credit Union to create a service provision across the country for Affinity Sutton tenants to access a single credit union. I'm being told time's up. How do we make this work? We cannot stay in the state we are, which is many different trade bodies, having different views, not working together as effectively could be, working with banks who see them as a threat and therefore don't invest properly, and working with sectors such as the DWP, in the housing sector, who all look at credit unions and say, solve my problem. But actually I'm not going to invest in you. Solve my problem, but I'm not going to invest in you. And Andrew's going to talk about that in a bit as well. Thank you.